closed resurrected, and we were able to make almost a $6,000 move back up from falling below 100K. But is that enough to continue the rally, or will the bears have the strength to continue pushing us down below 100K? Let's find out. Welcome back to Flex Candle, where we read the candles and flex the moves. I'm Flex, and today we're diving into a full top-down analysis on Bitcoin. We're going to start from the higher time frames, work our way down to the lower time frames, and check to see if we find any good setups. Now remember, this is not financial advice. I'm just reading the charts. All right, guys, it's about 6:30 p.m. Eastern time. The price of Bitcoin is currently at 103,944. Starting off here with the weekly chart, we're seeing that the stochastics RSI are low. Maybe we could start moving back up from here. Let's see what's happening. Yesterday, we fell below the 50 moving average, which is currently at 102,999. We fell yesterday all the way down to about 98,944. As you can see, we already wicked up above the 50 moving average. Now, a lot of people shorted here. This was not a good idea for me personally to short here because the candle hasn't closed yet. Look what happened here. We were at some point we had to be red to wick all the way down here, and then all of a sudden it ended up being a green candle, and from there we went up. We could have a similar scenario here. Now there's a lot of people stuck here in shorts, and they usually don't make it that easy. From 98 bring you down to 91 and then to 85. They're gonna bring you back up. So now it's possible we could make it back up to about 110. We're playing between a new range between 100K and 110. Flush out these shorts when everyone gets happy and starts longing at 110, thinking we're going to 120. Then that's probably where they'll bring us back down below 100K. But we have to be careful. For me, once we close a weekly candle below the 50 moving average, that to me will signify more bearishness. But unless I see an actual candle close below the 50 moving average, I still have to stay kind of neutral. Short term, we're definitely bearish, but longer term, we still have a chance as long as we stay above this 50 moving average. So right now, if we could close above this 50 moving average, we're still in a bullish trend. Now we head over to the other time frames, like the 3-day time frame. We see that the stochastics still are rolling over. It might not be over yet for Bitcoin. This candle is going to close in about 30 minutes, and then we're going to get a new candle. We're still not above the 21 moving average here, so we still have the possibility to continue going down. You know, there's always going to be a little bounce after a big breakdown like that. On the 2-day chart, stochastics still are showing signs. We could either roll over or we could go up. It's too early to tell. We bounced right off of the 200 moving average at 99,196. Now, if we lose the 200 moving average on the 2-day, the next logical one is going to be the 3-day, and the 3-day 200 moving average is at 87,332 right now. Now, on the daily chart, we had this gigantic red candle yesterday. We hit the exact measured move of this head and shoulder pattern, so congratulations on whoever took that. And today we got a little rebound. The stochastics are still not fully reset here, so even though we're getting a green candle today, we could still get a red candle tomorrow and continue going down. And don't forget, we have a bigger head and shoulder pattern, left shoulder, head, right shoulder, and this breaks us down all the way to 91K. So we could move it up all the way to the 21 moving average, which is around 109,131, and just get rejected from there easily. And something that's bearish that's happening is that the 21 moving average is crossing the 200 moving average on the opposite side, so that's bearish. And if this 200 moving average continues to go up and this 50 moving average continues to go down, that's going to end up being a death cross. Usually people think that the death cross, we fall down right away, but we usually pump into the death cross, and then after that is usually when you end up getting a move back down. So I could see us again going up towards 110, getting people happy, and then from there breaking further down and possibly testing 100K again, or going below and maybe going for that 91K of this head and shoulder pattern. So we're not at the woodworks yet. Now what's bullish is the 22 moving average is on the way up, but by the time we get up here, we'll be able to get above this 200 moving average at 113K. It looks bleak right now. I don't know if we'll be able to do that. We would have to see where we are once we get up here. If we do and we're up here with strength, then I think the rally could continue going up. If not, then we probably will see more downside. On the 8-hour chart, stochastics are on the way up as well, but look, we're still below all these averages. On the 4-hour chart, stochastics now are starting to get toppy. So what does this mean when we curve over here? Will we really be able to get above this 200 moving average at 112? Seems like we're far away from there. We're below 104 right now. So this could be an inverted head and shoulder, left shoulder, head, but we would have to make it maybe to this 100 moving average at 110, then get rejected, make a right shoulder, and then maybe from there we could blast up. But that's probably gonna take us into next week if that's a possibility of that happening. Right now, what looks more likely is we're probably going to reject off this 21 moving average, or maybe this 50 moving average, or maybe even the 100 moving average. That's probably what it looks like is going to happen. I doubt we're going to get above this 200 moving average. So unless we could get above this 200 moving average with strength, not like how we did here because we rolled over right away. I'm talking about getting into like the 115s. None of these moves up mean anything to me really. We're still technically in a kind of bearish tone here. Now the 3-hour chart, stochastics also getting toppy. 2-hour chart, we're already starting to roll over here on the stochastics. On the 1-hour chart, we got toppy here. We're already starting to roll over. We got above the 50 moving average. We're starting to kind of lose it here. This kind of looks like an inverted head and shoulder, left shoulder, head, right shoulder. This measured move could take us to the 200 moving average. That's at 108,397. But then what's going to happen there? Are we going to roll over? This also kind of looks like a cup and handle. So that's the thing. Even if we make it to 108,000, that will only really take us to about this 50 moving average, which was what I'm telling you. It looks like we're probably going to get rejecting one of these 3 moving averages here on the 4-hour. Now on the 15-minute chart, stochastics are on the way up, but we're barely above the 21 moving average. We got above it here. We fell down again. So right now, like I said, it looks like we can make it back up to 108, 110, but is that really significant? That's probably significant enough, you know, to make a couple of trades here. But in the longer term, are we going to fall down, or can we come back up? We have to continue looking at this 4-hour 200 moving average. If we could break this with strength, I say we have more upside. If we get rejected from here, then the head and shoulder pattern on this daily time frame kind of looks more possible, and maybe we do head down to 91k or lower. All right guys, so that's the breakdown. If this gave you clarity or a setup to watch, do me a favor, like, drop a comment, subscribe, and if you have a stock or crypto you want me to go over, drop it in the comment section. This is Flex Candle, where we read the candles and flex the moves. Catch you on the next chart.